Hello, welcome back to Business Consultant. Today we have brought you another financial model. This one is rental equipment Excel financial model. It is forecasted up to 60 months of assumptions. If you come to how to use over here, you can see that the beach cells tells you the input cells, the gray cells gives you the formula results, and the light gray fonts are the helping cells. Coming towards the input sheet basically gives you all the relevant assumptions that are being used to calculate that are being used in the calculations of this financial model. It includes the investment assumptions, some other assumptions as well. These are related to revenue and cost. As you can see over here, the cost assumptions also are being included, and the revenue assumptions. These gives the revenue streams or revenue drivers. Then comes the OPEX, the payroll and operating expenses, and the CAPEX, the capital expenditures, such as the fixed assets for the business. Then comes the assumption for um, working capital, as you can see over here. Coming towards the revenue analysis sheet gives you the revenue generated by the business on different products or whatever the categories or revenue streams they have. As you can see over here, it also shows the cost of the business, cost of goods sold of the business. Then comes the depreciation and amortization table. This shows the depreciation schedule, basically all the depreciation of the assets of the business or uh, on fixed non-current assets or fixed assets. It also shows the loan amortization, as you can see over here. Then comes the startup summary. The startup summary basically gives you the total fundings, expenses of the business in the first year. It also shows the assets, liabilities, and capital of the business in the first year. Then comes the income statement. The income statement basically gives you the total net income generated by the business in the forecasted 5 years, as you can see over here. Or if we come towards this, shows that it goes up to 60 months in monthly form. Then comes the cash flow statement. The cash flow statement basically gives you a brief on cash inflows and outflows of the business through its operating activities, investing activities, and financing activities. It also calculates some working capital assumptions which are being used in the cash flow statement. Then comes the balance sheet. The balance sheet basically gives you the calculation of total assets and compares them with the total liabilities and equity of the business. As you can see over here, it also goes up to 60 months or 5 years assumptions. It also gives a balance check over here, so you can know if the balance sheet is balanced or not. Then comes the break-even analysis. This shows the break-even sales of the business. It also shows it in the graphical context, so you can know about the function of the business much easily. Then comes the project evaluation. This shows the expected equity percentage offered to the investors and the WACC for the business, and the NPV and IRR for the business, as you can see over here. Then comes the sensitivity analysis. This shows the functioning of the business in three different scenarios that are optimistic, moderate, and pessimistic. Right? Then comes the dashboard. The dashboard sheet shows you all the information in graphical context. As you can see, it shows each and every calculation of the forecasted period in graphical context, so you can make the financial decisions much more swiftly and accurately as possible. That's it. This is the end of the video. Thank you for watching.